SMCI crapped the bed today, and in this video we're going to be covering my short positions because I'm completely closed out of all of them. We've closed over $33,000 in profits. We've had an 83% win rate just on SMCI in the past couple of months, and our average win was $6.8 thousand to an average loss of $900. Now this video is not to say, hey look, I was right, because I am not always right, guys. If I go ahead and I remove my filter, you're going to see that year to date, we are up $176,000 looking at more than just SMCI, but I only have a 62% win rate. I'm going back and looking at just January, which is one of my worst months. I actually had a 56% win rate with a $34,000 loss. So I don't want you guys to think that I'm bragging or that I don't think that I'm grateful every single day that I have the ability to do this and that I've dedicated my fucking life to it. But I really want you guys to understand more than anything is the idea that I had to stick to my guns. I had to be a contrarian, and I had to basically be called an idiot by a lot of people in order to stick with my trades. And so we're going to go through the actual setup. But what I really want the core value of this video to be that if you truly believe that you have an edge or that you have a strategy and you're going to publicly put it out there, you have to be ready to get criticism. And what you have to understand, and I understand this wholeheartedly from the individuals who are giving me criticism, these are people who are probably long. These are people who are probably losing money if SMCI craps the bed. And the truth about the stock market is that when you win money, somebody else is losing money. And I hate the idea of that. And I've been on the losing edge of trading many times in my life. I've blown multiple accounts up in my first multiple years of trading. I was not consistently profitable really until year 4, and now I'm moving into year 9. And it was all mental. Now, the positions that we took on SMC were all short positions. So these were not puts. I didn't have to worry about theta decay. These were all short positions where basically what happens is when you sell short is that you borrow shares from your broker, let's say for SMCI at $1,100, and you sell them out to the public. When you want to cover your position, aka buying your shorts back, you buy them back at whatever the price is at that current moment. So if I went short at $1,100, I could cover my short or just buy my shares back at $1,000. Now, my broker is going to get the shares because they loan them out, and they're going to get a small fee. But what I'm going to get is the spread between where I sold my short and where I covered my short, which today was $108 per share. And if I'm short 150 shares, that's about $15,000. That's really, really good. Now, the inverse could have happened, and I could have been forced to cover my short, or I would have covered it on my own, let's say at $1,200. In that case, I would have lost 8% or $92 per share. Now, the way that the GameStop thing happens where you have this insanity is that there are more shorts out there than there are actual shares in circulation. And then what happens is, let's say SMCI, let's just say I have $100,000 in my account and I'm $100,000 short on SMCI, and SMCI starts ripping. My broker will call me and say, hey Pete, listen, we know you have this short out, but you're paying the interest, which is fine. But if it hits this, you're going to have to cover. And what they can do is force cover because they're not going to lose money. They will sell my position to get their money back first. So this is why shorting is very, very risky. But I share it with you guys, number one, to keep myself accountable as a trader. It just makes me a better person and a better trader. Number two, obviously, to sell memberships to our community. I'm not even going to fucking lie about that. I love helping people. And why would I not want to actually share what I'm legitimately doing, since there's so many people out there who don't legitimately do it? And the third aspect is to show you guys just the transparency of doing something that's very, very risky, but doing it in a very professional manner. And I don't recommend all of the shorts that I took here for beginners to do this at all. And I've said that from the very beginning. Now, the most recent short alert, I had ended up posting this here on March 14th. We were watching a rising wedge. I said that breaking trendline support tomorrow is all we need before we test $900. Stop loss is set at a close of a higher high. So basically, when we have a rising wedge that ends up forming, it is a bearish setup in a bullish uptrend. So basically, if we go through and we just look at SMCI, I have Disney up for some reason, on this 1 hour chart here for SMCI, you're going to notice that we have this rising wedge. So as we're coming up, we're making higher highs each and every single time. We're making higher lows each and every single time. But we notice that there's a bearish order block sitting here. So as we come through, we cannot hold this trend line support. We break this trend line support. And now we have this gap, which most gaps will fill, down here to about $900. So we know, just like Jenga, a shower, that we pull one block out and the whole thing is going to topple. Doesn't mean that's going to completely die, but it just means that this leg, or this we're looking at, is going to topple. So we get the topple, sells off today about 16% from high to low, and I think tomorrow we'll find a support probably somewhere around $900. Now the next level from there is going to be down at about $700, where this order block is. But at this point now, I don't really care to go short anymore. Yes, there's a chance that SMCI could crater down to $600, but I've taken my money. I'm fucking happy. The goal here as a trader is not to stay in the game too long, not to get burnt, not to try to make as much as you possibly can. If you can get in and get out, make 30 grand with an 83% win rate, there's no reason, like, the stress is not even fucking worth it. Like, even today, and I know this sounds stupid, if I would have held, I closed right around here at about 1020. If I would have held till those lows, I probably would have made an extra 6 grand. Would it have been worth it? Right? Like, if I have to sit there all day and just watch it, like, maybe. To me, it's not. Like, I want to make as much as I can for as little stress as I fucking possibly can. Because to die 30 years early, like most hedge fund managers, then I should, just because money is fucking stupid, in my opinion. It just is. And I've been completely broken in prison, and I've been really, really well. And I'll tell you, on both ends of that spectrum, that remains true. So I hope that this helps. If you guys want to trade with us every day, go check out our Discord community. The link is in the description. I'll see you guys next time. Peace.